Hello all. So this video is about the chapter 5, the fulfillment process. Now I have included this chapter along with your sales and distribution module because essentially this is the theory behind your sales and distribution. Some call it the fulfillment process, some call it sales and distribution, some call it the order to cash process. So let's see what this is going to say. Basically, the learning objectives, the organizational levels associated with this process. You got to learn the all the relevant levels in an organization. Second is you got to understand what the master data is relevant to this process, and then third is very important. Identify the steps in the process. And then credit management process. Of course, every company, when they're selling to customers, they are dealing with a lot of their customers that are paying using credit card or some sort of credit management process. So we will also understand the credit management process, how it works for the company, and then how does the fulfillment process integrate with the other processes in the system? Of course, this is your first process. So when I'm talking about other processes, there are production process, the purchase to pay process. There's also the financial accounting process. So which you will be doing in the later stages of the semester. And then we'll talk about how to get useful information from your SAP system. So the basic system, basically you receive the basic process is you receive a customer purchase order, then you convert that to a sales order, and then once you get the sales order, you make sure that you have all the items picked and packed and then send out to the customer, and then the accounting takes care of the payment. So you send out an invoice to your customer, and you receive payment. Of course, this is chapter 5 in your textbook. So these slides that I'm showing you in this video is linked with chapter 5, which is the fulfillment process in your textbook. Like I said, fulfillment process, some people call it sales and distribution process, some people call it order to cash process, some people call it fulfillment process. So the organizational data is linked with the client, company, sales organization, distribution channel, sales area, plant, storage location, shipping point, and credit control already. So these are the levels, organizational levels. The sales organization responsible for making the sales, of course. These are the levels. You have the client at the top level, then you have the company code. Of course, when you read this chapter, you will understand that company code is based on the geographic area, geographic location. So within the United States, you have a company. If you have a office, that would be one company code versus an office in Germany or France or what have you. And of course, you could have multiple sales organizations linked with a company code. So that's how these three levels are associated with one another. Then the distribution channel is basically the organization, part of the organization that is responsible to get your items that your customers order to them. So it could be a distribution channel could be an online distribution channel. It could be as well be a warehouse. So depending on what type of company you are, you could be both. For example, you could be like Target, you could be like Best Buy, you could be like Walmart, who do sales online as well as in the store. One second here. Okay, so the distribution channel, you add the distribution channel to your layer. So you have the client at the top, you have the company code, then you have the sales organizations, and then you have the distribution channels that are associated with each of the sales organizations. So you have wholesale, internet sales, so just like I was telling you. Then you have divisions, depending on whether it's what strategies you're using, what sales strategies you're using. Then you have the sales area. Now, this GBI sales area is basically the hands-on assignment that you will be doing. You'll be dealing with the company called GBI, and that's why this is showing you what the GBI sales areas look like. And there's information about GBI specific to the company GBI in this, where they're showing you the hierarchical levels or the organizational levels. Talking about the distribution chain, the plant could be a manufacturing facility, it could be a warehouse, or it could be an office by itself. So that's what a plant refers to. Whenever you see something being referred to as a plant, that could be a manufacturing facility, a warehouse, or an office. Shipping points, the location for the outbound deliveries. So it could be a loading dock, it could be a mail room, it could be a rail depot. So it could be any of these. Now, the credit control area is responsible for doing the credit management. You could have centralized credit control area or decentralized credit control area. Of course, coming to the types of master data, you could have materials master data, you have customer data, customer material data, conditions data, credit management data, output master data. This is what the definition of material master data is also given in the textbook. These are the examples of master data. You can read through them. This is customer master data. Then this is a good pictorial depiction of what the different customer master data could look like. Continued customer master data. So there are a lot of slides on customer master data. And then when we're looking at the GBI customer specifically, so again, going back to the company that you will be dealing with when you're doing the hands-on portion, that would be GBI. Then you will be, again, you're reviewing the material information record related to the customers. This is specific to the company GBI. Then you also have pricing conditions, where you get to know what are the conditions for the pricing for the materials that your customers are going to buy, if they're incurring freight charges, surcharges, any discounts, what are the taxes, etc. Then you review these pricing conditions. This is sales orders, a list of sales orders. I'm sorry, okay, I'm just going to back up. So we were at the pricing conditions. We were reviewing the pricing conditions. Like I was telling you, the freight, taxes, surcharges, the prices of the specific price of the material that you're buying. Then you could have output conditions, how you're going to send these documents to your customers. And then you have, for credit management, you need master record associated with credit management. These are the types of master data. Now this is a good way of showing how the fulfillment process looks like, this various steps. So you have pre-sales activities where you contact the customer, you send them quotations, and then you basically it's a selling process. Okay, you're selling, you can do, and then once you get the deal, you create a sales order, and then once you have the sales order, this is the document that you use to create the shipment, the pick and the packing. And then once it's sent out, you bill the customer, and then you receive the payment. Again, coming back to the specific GBI scenario where you're basically selling touring bikes, this gives you the number you're selling. Not really a good example to follow, but obviously as far as that, as far as understanding a specific example, this GBI scenario given in the textbook, it's a good way to understand a specific example. Then you have this, like I was telling you, several pre-sales activities. You can do mailing campaigns. You can run different types of marketing campaigns. So these are pre-sales where you have you sell something to the customer inquires about it, you send a quotation, and then So these are all pre-sales activities. Data in a quotation. So if you look at this slide here, it will contain information about the client, the company code, the sales area, and what are the conditions. Of course, you have to tell the client, okay, these are the conditions when you're sending a quotation to a customer. And then you'll have customer information, of course, and then you have material information and any other information relevant to that quotation, including the customer number, the quantity, and the associated dates. So these are the documents, the reference documents for quotation. So quotation can serve as a reference document for these: a customer inquiry, quotation itself, a sales order, and the contractual agreements that you enter into with the customer. Create a quotation, like I said, triggered by a customer purchase order. You use this information to include organizational data information, contractual information, and then the outcome for this is the sales order itself. Sales order processing, make sure that everything that you process is carried forward, including the pricing condition, the shipping information, where those items need to be shipped, and the billing information, who it needs to be billed to. And data in the sales order, if you look at the pricing conditions, contractual agreements, then the material master, of course. So if you look at the relationship between quotation and sales order, of course, you could have multiple quotations linked to one sales order, and vice versa. You could have one single quotation linked to multiple sales orders. Think of a situation where customer, you send a quotation to a customer, let's say for 10 computers, and the customer really likes it, and then once you send another quotation for another 15. So, but however, when they enter an agreement with you, a sales agreement, they do it under one sales order. And a vice versa scenario where you send a single quotation, customer says, okay, you send me quotation for 50 computers, but I really don't have money up front to pay for those 50 computers, so why don't we split it up into 2 sales orders? So that's what you do here. Then you can look at the structure of the sales order. So this is the typical structure. Of course, when you will be doing the hands-on assignment, you will be looking at how a sales order document actually looks in the SAP environment. Backward scheduling is basically what you're doing is you have a delivery date that is required, let's say 2 days from today, and then you just go backward, okay, and saying that, okay, this is when I need to deliver, and how do I, what do I have to do, when do I have to do these activities to make sure I deliver on the required delivery date. So that's what backward scheduling is. Inventory sourcing, you're doing materials management. So once you receive a sales order, you have to know whether you have those items in your inventory. So for that, you do inventory management. Shipping involves outbound deliveries, picking, packing. Of course, these could be optional. And then elements of shipping, of course, orders due for delivery, and where it needs to be shipped and all that stuff. The delivery document can contain all this data, all this information. So again, the structure of the delivery document, schedule lines and delivery items. You can have multiple schedule lines, one for one single item, or one schedule line for one item. So depending on what you have agreed to with the customer. So relationship with sales order and deliveries, of course, again, you could have multiple sales order associated with one delivery, or one sales order split into 2 deliveries. So again, the example where this customer says, okay, we've ordered for 50, but however we want to receive them 25, and then maybe 15 days later another 25. So that's this scenario right here, and the opposite scenario is given to you here. Then the transfer documents, relationship between the transfer documents, deliver quantity versus picking quantity. Of course, they got to match. So Delivery quantity, the pick quantity, they have to be matched, because what you deliver versus what you pick, you know, there has to be a match. Okay, so if you need to deliver 10 items, you need to pick those many items, and this basically shows you the process. The packing options, of course. Okay, so impact of goods issue posted. So once you have delivered, the shipment has gone out of your warehouse or your dock. You have to post a goods issue, and this is, once that is done, then these are the integration points. Accounting document created under the general ledger. Stock accounts are updated, and cost of goods sold is updated. So obviously, let's say you have 100 computers in your stock, and you just shipped out 10. So you got to update your stock, so your stock account, and then you have to also account for the goods that you sold. So that's updated in accounting. So that these are integration points, and then controlling document is created, of course, and then billing is generated. Sales document is updated, because you now the status is okay, the items have been shipped to the customer, and then inventory and inventory management is also updated, and materials planning has to be done, because now if you are actually producing goods, then you will require raw materials, because now your inventory is less than what it was before the item was shipped to the customer. Outcomes, accounting, these are again integration points. Inventory accounts, cost of goods sold. The financial accounting document is created, controlling document is created, material document if required is created, and there are also updates in the billing, the sales document, and the material master document. The impact on financial accounting of the shipping step. This is explained well in the chapter, and it's basically you know what you are going to get credit for, and because when you sell goods, that's accounts receivable. So that's what they're saying, that comes under your accounts receivable. Billing process, you create invoice, you make deliveries to your customer. There are elements of the billing step, the data associated with the billing document, and again, this is different scenarios where one billing document could be associated with 2 deliveries, or a single delivery document could be 2 billing associated with 2 billing documents. Impacts of billing, again, financial. In the financial accounting module, you have the general ledger accounts are updated, customer account is updated, sales revenue is updated, then there's a profitability analysis done. Payment, of course, once the payments are posted, again, you have in your financial accounting, your general ledger is updated. Impact of the payment step, of course, like we discussed, general ledger is updated, and if the customer payment is associated with discount, that has to be updated in the financial accounting also. Now this is a processing of the customer payment, because once you receive the payment, how are you going to process it? That's what this is talking about. Then this is the credit management process, used to determine if credit should be granted to a customer. This is also part of your fulfillment process, or your sales and distribution, or your order to cash. These are the steps in the credit management process. Of course, this is one of the most generic steps. A company could have more complicated process than this. So these are the integration points. This slide essentially tells you, okay, what happens when you do fulfillment, what are the changes in financial accounting, managerial accounting, what happens in your materials planning, inventory management, procurement, and your production. So these are the integration points, what happens in these. It's a good way of kind of making sure that you understand that this fulfillment process is integrated with the other process. Like I was telling you, these processes, each of these you will be handling in your subsequent assignments. The next chapter is going to be dealing with your procurement. So you will see how that works. But essentially, as of now, just know that when there are changes in the fulfillment process, or there are things happening in the fulfillment process, the other modules or the other areas are also affected at the same time in different ways. Then your reporting, basically, this talks about when you have this data, when all the sales transactions and all that, how are you going to use this data to improve your customer relationship management, include your sales, include your marketing campaigns, etc. For example, if your data shows you that there's a specific product that is not selling in a specific area or specific demographic, you can find out why, and why it's not selling, what could be the reason. So this is basically analytics, understanding the data and trying to get more a better or achieve better business decisions. This is the document flow. So usually when we're looking at this entire fulfillment process, there's so many documents. This slide is showing you that basically the different documents and how one is connected with the other. That's about it. And